All right, let's jump right in. For decades, we've all gotten used to one big story powering the global economy: China's relentless, super fast growth. Well, that story's changing. And here's the thing, this isn't some accident. We're talking about a massive, intentional economic shift coming straight out of Beijing, a strategic pivot that's going to have huge consequences for, well, pretty much everyone.
Wow. I mean, this one sentence from the opening of the National People's Congress is basically the starting gun for a whole new economic era. It's a crystal clear signal that the old playbook, it's being tossed out the window. Forget growth at all costs. There's a totally new set of priorities in charge now.
And that, of course, is the big question, right? Isn't it? If the world's second largest economy is fundamentally rewriting its own rules, what do the new rules look like? And maybe more importantly, what does it mean for the rest of us? That's exactly what we're going to break down.
First things first, it is absolutely crucial to understand that this slowdown isn't a crisis. It's a strategy. It's a calculated move. Think of it less like a car running out of gas and more like a driver intentionally easing off the accelerator to take a sharp turn. And the numbers prove it's all happening by design.
So here's the headline number. The official GDP growth target has been dialed back to a range of 4.5% to 5%. Now, let's be clear, for almost any other country on Earth, that would be an incredible number. But for China, this is a deliberate deceleration. This is the clearest sign yet that the government is willing to trade some of that top-line speed for much deeper, long-term structural change.
And this next number, well, this tells us how they're planning to pull it off. They've set this super aggressive target to cut energy use per unit of GDP by almost 4%. Now, that might sound a bit technical, but what it really is, it's a massive signal that the old days of low-margin, energy-guzzling heavy industries are officially being phased out.
Yeah, this slide really lays it all out. It's the whole philosophy in a nutshell. On the left, you've got the old playbook. Just go, 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 growth at any cost, powered by those energy-hungry factories and tons of debt to build infrastructure. But now, look at the right side. It's all about managed, sustainable growth, high-efficiency sectors, and smart strategic use of capital. It is a fundamental pivot from how much to how good.
So, if China's ditching its old growth drivers, what's it betting on for the future? Because this whole slowdown isn't just about cutting things out. It's about clearing the deck to build something entirely new. And it really comes down to two enormous bets they're making in their new 5-year plan. Bet number one, build a truly powerful domestic market. The goal is to shift their massive population from just making things for the world to buying things, especially services and experiences. Think culture, entertainment, tourism, that whole shebang. And bet number two, which we'll get to next, is going all in on total technological self-reliance.
And that second priority, tech self-reliance, is where the state is really pointing all the cannons. I mean, just look at this list. It tells you everything about their ambition. We're not just talking about the essentials like computer chips and aerospace. We're talking about some seriously futuristic stuff. The low-altitude economy? That means drones and flying taxis. Embodied AI, brain-computer interfaces, you get the idea. Oh, and 6G and quantum tech. This is a full-court press to own the technologies that will define tomorrow.
Okay, so we've seen the plan. The big question now is, what does all this mean for the rest of the world? A strategic shift this big is guaranteed to create some huge ripple effects. We're going to look at 3 of the most important consequences for global businesses and investors.
First up, the commodity markets are being split right in two. The move away from heavy industry is creating a major headwind for all that old economy stuff, like iron ore, steel, and coal. But at the same time, the huge push into EVs, green energy, and high-tech manufacturing is creating a massive tailwind for the metals of the future. We're talking copper, lithium, nickel, rare earths. Put simply, China is no longer lifting all commodity boats equally. It's now picking winners and losers.
Second is a term you're going to be hearing a lot more: supply chain bifurcation. You see, China's crazy focus on tech self-reliance is a direct response to Western tech restrictions. And the result? A parallel tech ecosystem is being built at lightning speed. For global companies, this is a really big deal. It means the days of having one single unified global supply chain, they're numbered. You're probably going to need 2, one for China and one for everywhere else.
And finally, the playbook for selling to the Chinese consumer is being completely rewritten. The gold rush of just selling basic goods to 1 billion people, that's fading. But, and this is a huge but, as Beijing pushes to develop its own domestic leisure and culture industries, a whole new window of opportunity is swinging open. The real prize now is for those premium, niche, and experience-based brands that can appeal to a much more sophisticated urban consumer.
So let's wrap this all up. What we're seeing is a complex picture. Slower overall growth on the surface, but underneath there's this incredibly focused, aggressive investment in the industries of the future. And all of this leaves every business leader out there with one final, provocative question. This is really the question that's going to define global business strategy for the next decade. Does this new reality, this 4.5% to 5% growth, fundamentally change your company's strategy for Asia? How do you balance the risks of a slower macroeconomy with the massive opportunities being created in these super-specific, targeted sectors? That's the billion-dollar question that everyone's going to have to answer.